All right, good morning, everyone. As always, we'll do a broad market outlook. We'll get into some top ideas and, of course, any of your member ideas. Starting off with some of the stronger sectors. Recently, we see the biotechs relatively being, not stronger broadly, but relatively recently they've been a little bit stronger. They've finally broken out of this breakdown stage. We're starting to see this base starting to form, and the sector just kind of starting to wake up where risk reward standpoint, even with telecom. These are the two of the most beaten up sectors that percentage-wise back to these highs. If you can give yourself that year or longer, you probably have a decent risk reward trade buying up to this base than trying to buy some of the other sectors that are much closer to their 52-week highs. We see the same thing with the industrials. Again, they're still in this broader breakdown stage. We did recently see this little base forming. We talked about the big picture, this little 165 area for a little DCA, and it's working nicely. But you have to still expect it to kind of trade within this, call it 190 to 160. We want to be, buying up off of support in the 160 area, and then when it gets up into 185, 190, looking to take some profits if you're trading these sectors and not just buying them daily that I do, on M1. Most of the rest of the sectors and major markets are pretty much all just setting up. We see these just little flags that have been forming from the bounce that most of these major markets and sectors have had. So they all look very similar. Utilities, little flag here. Consumer staples, same thing, this tight little flag here. And this is, again, we know what a bull flag is. We know what the expectations are. With the bigger sectors, it's not as fluid as like a stock where it's going to flag and just break out. Typically with the sectors, it's going to be a little bit more, it won't be as transparent. Maybe it flush, breaks up to 189, pulls back a little bit. It's, just be aware of that. Same thing with healthcare. Again, I might sound like a broken record with all these sectors, but we're seeing the same thing. We're seeing a broad shift out of these breakdown stages in a lot of the major markets and major sectors. And we're starting to see more of these bases forming and pushing to the upside. Nothing dramatic, mid caps pushed up through the base. And, this next resistance area is probably this 470 area. And maybe this is now the new bigger range, 400 to 470, almost a 20% range. So there's, plenty of opportunity within that range. We're seeing that NASDAQ. We see this 2,000 point range forming, again, 10% plus range. Consumer discretionary, same thing. We're seeing these very big bases form. When you have these 20% ranges, it's not like we're going to see this immediate breakout. It's going to go 20% higher, but it can still pull back into these bases. But you can expect in time that measure to move higher. So like this 20% move would send us back to, 310, 320, and then you're basically a chip shot away from getting back into all-time highs. We saw with the SPY last week, it is well pushing up through that. Base has been forming for basically most of the summer so far. Next battleground release is 418. My thoughts broadly is that by the end of the year, 2023, end of this year, we probably could work our way back to these all-time highs. And now just find those spots to pick up stock, and it's waiting for those little pull-ins, those 3-day pull-ins, and looking to add. Those are really the right days. Again, broken record, financials in this little base starting to poke its way higher, but shouldn't expect, even with REITs, we shouldn't expect these breakouts of these bases and it just, stair step right back into these highs. You should expect, a couple of days up, a couple of days down, kind of chopping around. And that's typically how a lot of these bases form, especially with the major sectors. Again, technology, same thing. Small cap, same thing. And again, telecom and biotechs, in my opinion, the next year or two, just like, no one wanted to buy energy during the pandemic. Energy was the best percentage trade sector-wise when it was the most hated, when it looked, the absolute worst down here and it was dead in the water. This is where you got, the 300 or 400% return in a couple of years. I don't think we're going to see that obviously in telecom or biotech, just chart-wise. But if you're buying up through this base in telecom down here at 100 and the retest is 150, that's a 50% move on 10% risk. Same thing with biotechs down here, buying in the 110, 120 area, selling back in the 180s. It's that same 40 to 60% return where it might be hard to, I take that back actually, telecom, it would tech, you kind of get the same return, but trying to find one that's closer. So utilities is a better example where you're not going to really get in a year or two a 50 to 60% return out of the utility sector. This would have to go to maybe 200 to get that. And we're probably not going to see that as quickly as we might see telecom retesting all-time highs. And from a percentage standpoint, it might yield the best return if you have that patience. The biggest thing that I've been really focusing on, again, is the 10-year starting to roll over. Is just continue to follow what energy has done. Sorry for all these jumbled up letters, but energy had, and we've talked about this many times in these chart talks or these pre-market calls, energy had this 100% run up. When energy was trading here, everyone thought it was going to go to 200. Oil was going to be $200 a barrel and X, Y, and Z. And now we've quickly faded that move. Gas prices have come down, 20% so far this summer broadly. And we're seeing that continuous lower highs. And now we're edging over into that painful trade that we want to avoid. And we're seeing the same exact thing with the 10-year, just playing kind of catch up. The 10-year is the little brother in this example. Energy is the big brother. The little brother is following the big brother with what he's doing. And for us in the equity markets, that's a good thing. We want to see the 10-year come down. We want to see interest rates lower. The Fed can still talk about raising rates and do what they want to do. But it seems like the market's already kind of pricing a lot of that in already. And as we continue to see it roll over down under this 2.7 area, we'll continue to kind of bounce lower. It'll be good for us stock-wise. Sectors to avoid, material sector. Again, if we think of like that Boeing, 2 years ago pre-pandemic, it was strongest stock out there, it's the biggest leader, and then broke major support and it was dead in the water. We're seeing kind of a very similar pattern with the material sector, not as dramatic. Again, this is the entire material sectors. I'm just giving an example of Boeing, but this has broken that major support. It's currently kind of in that dead count bounce where sure, it might push up through 170, 175, look amazing, but more likely it's going to just continue that rollover until it goes at least a measured move. So for now, material stocks I would try to avoid as much as humanly possible. And same thing with energy stocks. The easy trade, we took full advantage of it. This is now the hard trade. Just avoid them for the time being. A few top ideas I'm keeping an eye on for the week ahead. Again, I've been in this UPS for for more than a year now, and just picking little spots to add to it. June Moon actually had one of the best sales in UPS in the summer. I remember he was selling some up here. I was actually buying it, so I was on the wrong side of the trade. But down here, post earnings, which is going to be tomorrow, if it gets an opening range breakout, I'll look to add up to that 190 area. Monster, big macro level through this 100. Still needs plenty of time. It's still kind of in this like 10% range in the short term, but one to keep on the radar. Same with this Ulta, bluish sky breaker through this 420. Again, very extended off its support. Not like I'm going to buy this today or tomorrow if it was going to go. It does need to tighten up a lot. Probably even, we would need to see kind of this pivot versus like 400 really to be wanting to take the same, but just some names to keep on the radar. NBIX up to 100, pretty decent base that's been forming here for a very long time. Kind of been off most of our radars for a while as well. This diagonal trend line as well as this horizontal base forming. So these are some names to keep an eye on. As long as with Gilead and a lot of these, I'm not really ready right now. BMY, little support buyback, $2 risks, buying 74 or 72. Could be a little trade there. Wrapping up here again, some of these lessons learned. We've been keeping an eye on these cheaper names of why we want to avoid them. This MOD finally went. And again, if you took it this time, you're still kind of 1-to-1 on your risk reward, risking 10% to be up 10%. Not the best trade. PLAB, same thing, it recently went, still kind of 1-to-1, up $2. You got to give it 3, not even 1-to-1. And then HRT and AMRC. And AMRC was one mentioned last week. And these are two that still have yet to really move much. And this is, again, the primary lesson here is why we want to avoid these cheaper sub $30 names. Even if you trade them perfectly, you're getting kind of 1-to-1 risk reward or less than that, given the real risk in some of these cheaper stocks. So as appealing as they may look, they often in reality are much more costly. A couple winners from last week. Amazon was, I know, Shake's big idea for the week. Still looks amazing. The next bigger level in this name, obviously, is 130. That's that bigger base that's been forming in this name. if you're positioned here, you can obviously take profits into that or try to hold some for that bigger move. FBHS, I believe, was Abby's idea. Again, these big downtrends, she's buying through these breaks, looks great. And I believe Intuit was another one of hers. Same thing, that little wedge break, both working nicely. I'm done now. I'm done talking. So, Heaven, if there's any member ideas, we can go over them now and then go over higher member ideas.
Yeah, I got a couple that I'm looking at right now. Nothing I'm too eager to get in just because, like I mentioned in the chat, we have a ton of big market moving events this week. So I'm expecting like a good amount of chop until Wednesday. We have FOMC meeting on Wednesday and then the GDP numbers on Thursday and tons of like tech earnings. But a couple names on my watch list. The first one is AMGN. So kind of giving us a little flag here. Higher lows since February. You see the low from February, then May, and then June. And now just kind of giving us this tight flag between 250 and 242. And obviously, yeah, if you zoom out, you can kind of see this is a pretty macro level. Obviously, it really needs to clear like 260, which is probably the real level to be buying more aggressively. But I think we could get a nice little move from 250 to 260 and position ourselves pretty well for that next move up and then through all-time highs. Next one I'm looking at is ATO. Another one just kind of tightening up here, giving us kind of that volatility contraction. Volume's been sort of drying up over the last few months. I like it through that 114, 115 area with just to stop under 111, kind of under the most recent pivot. Another one I got that kind of sold off on Friday but still holding up pretty well is this AXNX.
Yeah,
AXNX. Yeah. So it needs a little bit of time up here, I would say. Very strong move off that 48 area over the last few weeks, and now just kind of needs to go sideways here, maybe pull back into 60 again, and then bounce. It has earnings in 7 days, so that might be the catalyst to kind of get it over this recent resistance. Another one that I had been watching for a while, it sold off and kind of pulled back to the upside, is CAL. C is in cat. TAL is not too bad too. So yeah, that one you actually already had marked up. It sold off at that 30 level that we were looking at, and now just kind of reconfirmed that support area is there. So just $5 range there. I'd like to see that tighten up a little bit more. And then, I mean, some solar stocks, ENPH is still on watch for that breakout level through that like macro 230 area. If you zoom out, you'll see another point that it touched back in 2021. So, big base here, just sort of working its way up, higher lows since beginning of this year. That's exactly what we want to see when the overall market's in a downtrend. This is sort of just putting in higher lows and giving us a really nice macro setup. What else we got? We got Django's favorite. We got Oxy on the list. If you look at the daily chart, I know, Ben, you've been saying Django, get Oxy off your list, but I mean, this thing it's still alive. It doesn't want to die. So, that's always a good thing. I like it through this like 63, 64 area. And I know you don't have the moving averages on your chart, but it's just sort of holding all those moving averages, the 50, the 9, the 21 is just sitting right under basically the last week of trading. So it's a pretty low risk opportunity there. You're risking about $4 on it, which is pretty nice. And then I'm watching this Google, which I got a really nice short on Friday on a screw bar play, which actually I might actually do a video on what a screw bar is, because I had a couple people ask me, or maybe we'll do that for the Q&A later if you got some time for that one. But I'm watching this Google off support here. I want to see if it holds or if it dumps earnings tomorrow. So we'll see. That'll kind of be the decision maker there, if we kind of dump there and gap down and then continue this leg lower, or if we can hold that support and push back higher. And then the last one, I think Kusha actually mentioned this one last week, was this MCK through 335, 336 area. Looks really good on the daily chart, the weekly too. But I mean, just flagging at highs, this is everything you want to see out of a strong chart in a weak market. So looks really solid. As for some member ideas, I got Eric, who's looking at JBHT. JBBHT. Yeah. So little post earnings flag here. Kind of just had a strong earnings reaction, and then for 3 days sort of just traded within that earnings day range. So a little flag there. I mean, I prefer these flags, you know, on a strong uptrending chart near highs, but could have some potential there through 175 area for a little continuation. I mean, it will meet some resistance at 180, but if it can get back above that 180, it has a lot of room to the upside. So that's good. Other than that, I think that's everything. Anyone in the chat right now have anything they're looking at?
I've got a couple.
Yeah.
So I've been looking at 4 names, if that's okay.
Yeah, Sam.
Okay, so the first one that I'm looking at is the CBZ, Charlie Bravo Zulu through 42.5, 44, BZ Zulu. I looked at the monthly chart. It's been on a tear basically, but I don't know how much upside it has.
Yeah, I mean, I think it looks solid. Obviously, really strong top right. I think you might need to wait for a little bit of sideways consolidation up here, just because, you know, it's basically gone straight up from that 37 support area. And then as you can kind of see what it did last time, it went up there, and that's always kind of what I base my thesis off of, is like, what did it do last time when it got to that resistance? When it went straight up, it sort of just went straight down. So we want to kind of see it flag out here, maybe like between that 42 and 41, and then see if it continues. It looks like it has earnings in 3 days also, so that might be what it needs to push higher. So definitely want to keep an eye on. I like this one.
Yep. The second one is a relatively newer name, RYAN. Has a great weekly bull flag. It kind of went, but
yeah. I had this one. I had this one marked actually through 40. I had it marked through 40, and it looks like it broke. That was probably the spot to get in. But now I would watch. What would you do now? What would be your plan for this?
I'm just watching it. I mean, it kind of already went, so I'm looking for that pullback and then make it. Right. I mean, wait for it to do a higher low of some sort, and then get back in with like the minimal risk, because I'm not really sure. It doesn't have a long history. It just is a relatively newer name. So.
Yep, that's exactly what I was thinking. Is just wait for a retest now. That's kind of the only thing you can do. You don't want to chase this one on the way up. Better to watch, see if it retests at like 41.50 or even 40 level, and then you'll have a really nice low risk opportunity to buy.
I like it for the fact that if it goes up, it's like, you know, blue skies basically. Nobody's trapped in it and that sort of stuff. So we'll be keeping an eye out. Another one is this logistics name, GEF Golf Echo Foxtrot, containers and packaging. Look at the earnings behind the way. I mean, earnings it's already passed, has a really nice weekly setup, but it's kind of extended from the support there. So we'll be keeping an eye out for like more of a flag setup there.
Yeah, I think a flag or a retest of that 66. But then like Ben is showing right now, is that 70 level
is crucial. Yep.
Probably wait for a flag up there.
All right. Last one is that it's a biotech RPRX, watching 45.
Yeah.
It's coming out of a base. So, I mean, hopefully it's done. It's stage, I think it's stage 4 break, stage 3 or stage 4, I forgot. But looks good with that base. So we'll be looking for a volume. Earnings is soon, so not really sure there. So I see how it reacts. But yeah, cool. Those are my 4.
Awesome, good charting, Ashish. Looks like George is looking at HSY Hershey's. Wants to buy through 217 versus we'll call it 215. Double inside day down here. I think this one could go either way. To me, it looks more like it might go down. But we'll see there.
More, it's like you have easy time, getting smoked, and you have like just a lot of. Again, this is like a simple You're looking at a lot of green candles here. You've seen a lot more red candles here. And I see the tightness that he's looking at, but you got 5 days of indecision. You have 5 doji days. You have 5 of those days that are, you have these like more likely kind of sellers kind of controlling the days. That this seems more like you said, like this probably is going to like roll over down through 213. Then, and again, it's very tight risk. You're even if you want to, it's a shot 217 versus 213. It's $4. You're risk 2%. Best case, you kind of get a move to 230. Okay, so you're going to make 13, $14, risking $2-3. Well, this is definitely more of a shot. It's like that low probability shot. But that's something where it's like, this is a trade where, like, I think back in the prop days, we'd have like a buy stop above 217, and then we'd have a sell stop under 213, and whichever happened. But when you have those types of ideas, when you have no conviction, you're just like flip a coin. If it goes up, cool. If it goes down, great. But you don't really have like that confidence in it. That, again, it's tight risk, but not an A+ idea, which is fine. Every idea is not going to be an A+1, but
yeah, personally for the HSY, I would like when I feel kind of undecided there, what I want to look for is I kind of want to look for that candle that's like screwing people. So like, for example, I would much rather go long on this if it shakes out that support and then bounces. That's where I'd want to look to buy it. And then the opposite for a short, I'd look for that fake out to the upside and then look to short it at that 217. Just kind of because it's in that battleground. I don't want to be the guy that just gets stuck in that buy stop and then it just, I get faked out. So I'd rather see, and if it does break resistance and it does push through, then I'd look for, a pullback and then a retest off resistance instead of trying to buy within that little battleground that it's in. I want to see it actually get out of there and then confirm that it's moving in that same direction, or if it's, reversing and it's got a couple people stuck in it. That'll kind of give you a even lower risk opportunity, because this is, like you said, it's only 2%. You're risking $4. But if you actually get that shakeout or that fake out, you'll risk even less than that, probably like $1. So that's what I would look for.
George,
yeah.
The opposite example, like similar with what you're saying, but like this is more of like a buy. Like we want to buy AbbVie up to 155. It shook out this 148, and like what you were saying, when it gets back at the 150, the probability of this breaking out higher is more likely much higher because you shook these people out, and these people are now chasing. Versus when it holds this support perfectly, everyone that was buying here isn't really like rushing to try to buy this breakup because they're just sitting with good stock. So that's where that, like we said, the Hershey's, that first move might be that fake out move before it's that the next move is probably.
Right. It needs to grab that liquidity and trigger some orders before actually making a move. George Espejo is looking at BJ through 71.
BJ again, macro wise looks great. Weekly chart, it's going to look amazing. Short term, just it's tough for us to just get involved unless you can really give it verse 68. But we got to be like really perfect here. Earnings aren't until mid-August, so you got a couple weeks. But yeah, if you can keep it tight versus at 68, 67, if it wants to go, you definitely want to be involved. Even like this, kind of like Humana, like it's finally starting to go now. And now if you can just give it, if you're still in it and your stop's versus 460, who knows where it can go. And that's kind of, it seems like the same thing here. If you can get in and it can respect that stop, definitely looks good. But
yeah, I mean, I don't like to put too much emphasis on one candle, but that Friday reversal right off of 71 just tells me like there's a ton of sellers like just ready to unleash stock there. So it's going to be tough to break that level, I think, until we really see some more consolidation at that 67 area. What else we got? Jason's looking at NEP 78.
NEP.
Yeah, some nice earnings on Friday.
Big, nice little flag forming here again, but be aware it's a utility name, it's a little bit lower beta. You can see that like even a lot of these candles, like it just doesn't do much, but it's going to be hard to buy this like today. If this is going to go today, you can't really be buying this name 10% off of support. I'm not saying never, very unlikely that you're going to get a 50% move on 10% risk in a utility name. So this is if This is like the one where if it pulls into support, we talked earlier about, waiting for the market like this, that third day down, looking to buy up. This is like that perfect example where if it goes, you kind of miss it because you can't just blindly give this thing even low a day. You give it $3, this thing's not going to go to 95 while you're in this flag. So looks great. We just need to find like a tighter, lower risk entry than buying the break in this right now.
Yeah. Or if it breaks, look for that retest of 70, 77, 78, and then buy the bounce. Oh, fire alarm. I'll let you handle the rest of this. I'm going to go mute.
Oh, that's you. Okay. All right, I'll finish the rest of these. So we got George looking at HRB through highs. Let's see. So again, just retest that major high. It's poking through. This is, yeah, just stay muted. This kind of seems, again, we're talking about pennies here. 37.50 was probably the buy. If you're buying 38, you're keeping it super tight versus 37. It's really low probability. Here, if you're really buying this and you like this, verse 36 seems to be the move, but it does seem like you probably should have been in this already. H&R Block, again, this is going to be their big earnings. This is, again, all their earnings of what they made for the tax year. I will tell you, do not expect a crazy earnings reaction because everyone knows that this is their bigger quarter. And I know this because I bought Jackson Hewlett. It's a banker company. This was 10 years ago. And I put all the money in my account at that time into Jackson Hewlett with this bright idea that, the summer earnings after their tax season is going to be amazing. Everyone also knew that, but the company also went bankrupt. So I lost all the money in that. But that's just, again, this is a tax apparent company. This is the quarter they're going to report what they did for the year or for the most busiest part of their year. So I would not expect a dramatic gap up because of that, because most people are going to know this is going to be their quarter to knock it out of the park. So those expectations are kind of already very high. But again, if you could take it, verse 36, I would just be out into earnings. I would not hold it into it because, again, most are going to expect this dramatic gap up because of that this quarter. When everyone knows that, it's probably not going to be the case. And then lastly, it's okay. Yay. Base forming down here. Again, we can see very clear breakdown stage. And as we talked about, the stages overlap. They don't trade perfectly together. And now we can start to see this base starting to form down here. We can see some higher lows. Let me get rid of all these lines. This is the low. Now we got these higher lows and more higher lows coming in. And you're looking at 106. I think really the real area here is kind of this 110. This is kind of like that Amazon level. Like a lot of these bigger bases that have been forming, this is probably going to be the more significant area where 106. I can see what you're looking at there, but I think if you're going to take a feeler through 106, cool. I think really though the ad or the full position is probably through this 110 when you can buy it versus 100 or even versus 106. So definitely want to keep on the radar. This is definitely one of those bigger bases that if you can give it the time and you have some patience with it, there's a lot of room for this thing to work its way back towards these highs. But we have to remember that the move back to these highs, it took nearly 6 months for it to break down. The grind back to highs is often much slower than the breakdown. So if it took half a year to break down, you could probably expect realistically a year to 2 years for it to, we'll say a year and a half to really get back towards those highs. But again, buying 100, selling at nearly 300, it's a decent return for that type of. But again, I think we kind of covered it all. Some updated items. Again, we got the first sample of the watch coming in this week. So once I get it, I'll be able to show you guys exactly what it's going to look like. I will have the completed samples of the watch case with the new logo on it. going forward for the pre-market calls, what I would try to request, we're not gonna make it a requirement, make it just a subtle thing we'd like you to do is just to come with one idea. I think this was great that a lot of you guys had more ideas today, especially with you guys being able to kind of talk about the ideas. I think to make it more of a dialogue than me kind of sitting on a soapbox with Heaven, I think would make these more fun for everyone involved. So I think next week, if you do want to come in, just come with one idea. If you don't want to talk about it verbally, you want to say it in the chat, it's fine. But the more that we can make this an open discussion, I think the funner and more valuable these phone calls or Zoom calls can be. So again, that's it on my end. And then Heaven, hopefully your house isn't burning down. And
Not yet. I'm on the 8th floor. It's fine. If the other one's burning, it's okay.
that's good to know. All right, guys, market's open. Again, Shake's enjoying his time in Ohio right now, so he's probably not going to be very active. I'll be in the chat most of the day today. And if you guys have any questions, let Heaven know. We'll do the Q&A later on today.
Yep. Catch you guys later.
In the chat.